right. Hello, guys. Welcome back to UCF Forest Academy. Welcome back to our academy once more. So, in today's lesson, we'll be covering market structure. We'll try to explain what is market structure to you guys, and there's a whole lot of things that we'll be explaining on today's lesson, which I would want you to watch the video to the end. And I believe that after watching this video to the end, there's going to be a very big difference between you before and now because you'll be able to analyze the forex market, right? So there's the things we'll be covering on today's lesson, which is the table of content, is what is the market structure. The number two is the three phases of the forex market, which we are going to extensively explain what is an uptrend market, downtrend market, consolidation market. This can be still called accumulation, manipulation, distribution, or Asian session, London session, and the New York session. All right, I'm going to still show you the differences or whether they are the same or what, anything like that, and then we'll try to understand how to spot external and external structure and internal structure. I mean internal structure, external structures, and internal structure. All right. All right, so we're going to try to understand what's the external structure and internal structure, and then understanding what is BOS in details, very important. And so, and each row in the market reversals, we try to understand the difference between the CHO versus BOS and the key difference, their key differences. And we're also going to, under this CHO, we try to explain what is a failed swing high and lows, which can be called SMS. We're going to understand what is shifting market structure, that is it. And then flip zone, very important, how to identify flip zone, and POI, point of interest, in between the unmitigated point of interest, fresh opportunities, and mitigated point of interest, consolidation, continuation opportunities, and how to use POIs in the market. Then lastly, I think we're going to be covering liquidity pool in the market, and then top-down analysis. Look at the top-down analysis. So we'll be covering a lot of things on today's lesson, which I don't feel that this video is going to be so long. There's no problem because I'm going to cut the videos, like I'm going to put it in different sessions so that you will not take it won't take you too long to watch, so that you can easily go back to what you have watched before, like you watch each session, so that it will be easy for you to absorb or understand whatever I'm about to explain to you on today's lesson. Okay. So please, this very particular content has already been posted on YouTube because of some reasons sake. I just decided to post it on YouTube. One of the key reasons is just to say some big thank yous to you guys that have been following me here on YouTube, that have been encouraging me on the channel. What I want you to do is to like and subscribe to the channel. This is a VIP content that I want to share to you guys to enable and to enlighten you guys in terms of market structure, so that you will not be found doing something else. Okay, so take the opportunity why it is why it is here, and watch the video to the end, because I believe that after watching the video to the end, you'll be able to start analyzing the forex market. But there's some things you'll be able to understand. Okay, and then what I want you to do is to like and subscribe to the channel, turn on your notification button, and then try to share the videos that have been posted here as well. You could also watch out some of the videos we have dropped in the past. If not one or two, could be of a massive helpful guide to you. We have done several videos in the past, and even particular video now will come under here, will come under playlist, because we're going to cut it in different sections. So I want you to come under playlist and then search for market structure. We already have SMC tutorial here, currency breakdown, and Fibonacci retracement tools lesson as well. So there's going to be a market structure playlist here. So you're going to watch through some of the videos we have dropped there. Believe me, the video is going to help you, and I want you to watch it to the end. Don't skip any part. Okay. So please, let's talk about our online class. Should in case have you been looking for an online class where you want to learn forex from beginners level to advanced level, that is UCL Forex Academy is one of the best online class you should be looking forward to have, because this is the only online class that cares most about your development, that is ready to be there for you. Understand that everybody learns on their own pace, and that is ready to give you more patience, and they are there to work with you. This is not like the usual online class where they drop videos for you. At the end of the whole day, nobody cares to reach out to you. Nobody even cares to know how you are doing. We have a tailored way to understand and to track you, each of our students' development. You get, so there's a lot of part of differences. There's a lot of benefit you're certainly going to get when you enroll into our academy. Think about a private class online academy. We don't mentor everybody once. We mentor each and one of our students once. The other students doesn't know your development, or doesn't know the stage you are in. Okay, it is between you and me. It's not between you and them, and nobody is there to to mock you or whatever. Okay, so all you have to do is to use the number on the description below. Use that number and reach out to us so that you can be part of this very particular academy. As a Nigerian, you will pay 75,000 naira. Then as a foreigner, so I mean, like if somebody residing outside Nigeria, you would now pay over $80. So it's not really much. All of this is not even up to 100 USD. So that is it. So I wouldn't want to delay much. I want to start the video right away for us to be able to try to understand some certain things on this particular lesson. Okay. And then, what is market structure in any way? So, market structure is the framework upon which the price action of the financial market is based on. Now, I come again. Market structure is the framework upon which the price of a financial market is based on. When you hear about the word framework, it's just like like a framework, like a design, how something is being looked like. Like you remember that when we were in secondary school, they sometimes defined skeleton as the rigid framework of the body, meaning that the skeleton is what that gave us shape, that was able to tell that there's a head, there's a hand, there's a leg, and then when you look at each part of our body, that at least you will see that hand is being meant to carry something, and then we have different sections in our body. So that is what they mean framework. So the skeleton there is projecting that sometimes whether we are tall or whether we are short, and whether we also whether what else, what kind of examples can I actually use to make you understand. But I just want you to know that the market structure is like the skeleton of your body. Are you getting that? It's like the skeleton of your body, and such a way that all the bones in your body does not do the same work. That's the same way in the forex market. There are some certain things that doesn't do the same work, and that is why they say that we have a three phase in the forex market, which can still be called an uptrend market, a downtrend market, and a consolidation phase market. Now, this is a part that you need to pay more attention to understand, because you need to understand how to spot an uptrend market, and how to spot a downtrend market, and how to spot a consolidation phase market. Now, because we say that the market structure is the framework of the body, that is why we have an uptrend, we have a downtrend market, we have a consolidation phase market. And that is why they say, since they say that a skeleton is the rigid framework of the body, that is the reason why we have a hand, we have a leg, we have the bones that's on the leg, we have the one that is in the knee, we have the one that is in the head and everything. I think the skull is in the head, right? So these are different bones spotted in different part of our body that has different work they do. So that is how it is in the market structure. So when they say that something is in an uptrend market, that's the three phase of the forex market. That means that in the forex market, whenever they say that something is in an uptrend, that means the market is pushing to the upside. That means the market is what is pushing to the upside this way. Do you understand? That means the market is moving to the upside. So this is the point that the market is making a series of higher highs and higher low. This is a series of where the market is making what a series of higher high and lower and higher low. So you may be asking me, what is higher high and lower low? Let me delete this and draw it proper. So what I mean by higher highs and lower low is the moment the market prints a new high like this, it is called a higher high. As long as the market is an uptrend market, the moment the market prints a new high like this, it is called a higher high. The moment the market prints a new low like this, it is called a higher low. The reason why they call it a higher low is because the low is greater than the previous low. It's greater than what the previous low. And since it's an option market, it's going to print a new high that is greater than the previous what high, and it's going to look like this. And then the next thing you're going to see him printing another low that is also greater than what the previous low, which we call a higher low. The next thing again, we have a new higher high, we have a new higher low, we have a new higher high, we have a new higher high, we have a new higher low, we have a new higher high, new higher low. So something that look like so. This is how the forex market looks like on a downtrend market. I don't know whether my drawing is even nice, but just understand the fact that this is how the forex market looks like on a uptrend market. So when you consider that something is an uptrend market, it's just like your building, it's just like the house you are residing on, you are living on, or maybe you live or you stays on the last floor. Maybe like it's a 3 story building, and then you live on the last floor. Maybe the last floor is like the the third floor. Do you understand? So for you to get to the third floor, you need to climb the first step, you need to climb the second step, you need to climb the third step, you need to climb something like the I think the fourth step or whatever. So before you can get to your own apartment, right? And also for you to when you are climbing that those steps, it means that you are in series of what uptrend. You are going up. You are going up, and you can accept with me that the first step you climb, the first step that you took, that you climbed, is not the same step that took you to the second floor. Each of those steps are greater than each other, right? Is greater than what each other, because the second step will give you more, will take you more closer to your what to your apartment. Okay, so that is what I really mean. So this is what we call higher highs and higher lows. So this is it. So you shouldn't be confused whenever you hear about somebody saying higher highs and higher lows. So let me auto duplicate the very particular stuff, then try to paste it everywhere so that you will not be confused anything. So I like making things very simple. So when we talk about accumulation, manipulation, this very particular stuff, accumulation, manipulation, distribution. Now you need to understand that okay, I need to explain all these things before I can be able to explain this. So since we say that whenever the market is an option market, and the market does what, the market breaks a new high and forms what, a new higher high, and then whenever it's in a downtrend market, the market keep on respecting the previous what, respecting the previous higher low. It will never take out the previous what, higher low. It will always respect the previous higher low and will keep pushing to the upside, printing new lows that are greater than others. Do you understand now? So then when we talk about that something is in a is when we talk about that something is in a downtrend market, this is a period, it's just like an inverse of this. This is a period when the market is pushing to the downside like this, when the market is pushing to the downside this way. So you see, when the market is pushing to the downside like this. So this is the period when we talk about that something is in a downtrend market. Like the market will print a series of higher low, and then it will print a series of what, lower low. The next thing you see the market printing a new higher low, and then higher low. Sorry, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. So this is when we call that the market is in what, in a downtrend market. This is a period of time when you have taken a decision to come down from your apartment, which is the last floor, to the last step. Maybe you want to go and get something on the downstairs. You want to get something in the compound. Maybe you want to fetch some water, or maybe you want to go for an errand, or you want to go to your office. You don't you For you to get down, you need to climb. As in, for you to go to your office, you need to climb down. You need to come down from the last floor which you are residing or you are staying, to the exit door of the building. So when you start coming down, when you pass the first step of the last floor building and the second step of the building, so when you are coming down, it means that you are what, you are in series of downtrend. It means that you're in series of what, you're in series of downtrend. So okay, it's just that we have a lower low, lower low, a higher high. So this is how it looks like. It is a higher low, and then the next thing you'll see the market printing. I have to auto duplicate all these things so that you will not the so that you can easily capture everything I'm doing here to understand. Although we have already shared this in as a PDF to you guys there on the community, we understand that PDF is not really enough to enable you guys to understand whatever we meant, because you need a video to watch. And what I'm begging you to do is that you don't really need to stress yourself as a VIP student. All you have to do is to screenshot all the very particular stuff. Screenshot it, share it on our private chat, and then we are going to be there to assist you to gather up some of the questions that you have dropped and review the video for you, because we understand that it is not just a very particular video that can enable you to understand whatever we are trying to explain on today's lesson. Okay, so this is the market on a downtrend market. It will keep on printing a series of higher low, higher lower low, because the reason why we call it a lower low is, but the previous low, the new low is going to print is lower than the previous what, is lower than the previous low. So it will keep on printing a low that is lower than the previous low, and that's why they call it a lower low and still call it a higher low. Okay, so you can see just like an inverse of what we are talking about here. So when we talk about a market that is in a consolidation phase market, this is a period of time when the market is not even going up, it is not coming down. The market is just in one place. The market is what, in just in one place. This is like this. The market will go up, the market will come down. The next thing again, you keep seeing something that look like it will even struggle to understand where exactly is this market even going. You will just see the market This is a period where the market is what is in a consolidation phase market. Is in a what is in a consolidation phase market. So whenever you spot something that look like this, it means that the market is what is ranging. It means that the market is what in ranging. So you can still call it a sideways market. You can still call it what a sideways market. So the moment you see the market in this form, you can spot the difference between the very particular thing. You can spot the difference between this now. Can you see this very particular stuff and this? Let me try to drag it up so you can see it very proper. You can spot the difference. This one is going up, this one is coming down, and this one is just fixed at one particular place. So whenever the market is in this very particular part now, this is where we call the market is. Look at all the English names that these forex contents these people normally give it. Like when you come to YouTube, you get different names. A little thing can make you forget what they have taught you, and you might think that what you are hearing there that you have never heard it before. I just want to tell you that all these things are the same, and with my explanations, you see that all of them are the same. It's just like different terminologies. You just rebrand it and give it different names. Like they will see something and they will give it multiple names, and this is how it looks like. So this thing can still be called a consolidation phase market. It can still be called what? A consolidation phase market. When it's consolidating, it's not going up, it is not coming down. When we call it a range market, it is not going up, it is not coming down. When we call it a sideways market, it is not going up, it is not coming down. The market is just fixed at one particular place. So the how do you what is the key thing, or what is the thing to consider whenever the market is in a consolidation phase market? It's just the support and the resistance and the support. Where the high is the what? Where the high is the resistance level. Like this, the high is the resistance level. Let me draw this trend line very well. The high is the resistance level. Why the low? Why the low like this? Is the support level. Is the what? Is the support level. Okay. When we did support and resistance, we break down how the market respect how the market does whenever it is in a support and resistance, right? So I believe that that very particular information was really enough. Or should, in case if you still struggle on this part, I've always remind you guys that you don't really have a problem as a VIP student. All you have to do is to find a way to your our private DM, try to reach out to us, or then ask us all those questions. You know how we do it, and we'll make sure that we'll reply you to make sure that all these things are being solved. So whenever the market does the kind of thing, this is the period you need to be very, very careful, because the thing that is here will be so difficult to be trading, like because you hardly know where is the support level and where is the resistance level. But there's but there's this thing that I normally do whenever I understand that the market is in a consolidation phase market. I always try to get the height of the range and the low of the range. The height of the range will enable me to know where is the key level, and the low of the range will enable me to know where is the key level as well. So how do you now get the height of the range, and how do you get the low of the range? The way you get the height of the range is by you marking out the first high that printed all those things that started consolidating. The first high is this. If you mark out the first high, extend it to the future, continue to see how the market does whenever it comes to the height of that very particular range. Then whenever you when then you also try to mark out the low of the range. The low of the range started from here, where the last low the market printed before it started what consolidating. Don't worry, we are going to go to the chat to break down all the very particular thing, where I'm going to show you how to spot an uptrend market, how to spot a downtrend market, and how to spot a consolidation phase market. But you just need to understand that whenever the market is in a range phase market, you need to get the height of the range and the low of the range, extend it to the future. Now you need to understand that it is not really whenever the market comes to to a range phase that is always clean like this. It is not even as clean like this. This is a period that where we are going to be seeing some little like spikes above the resistance levels like this, because the market always knows where the stop losses of retail traders, where the stop losses of most retail traders are resting. They knows where your pending orders are. So they know that a lot of people are looking forward to sell from here, and that's why they will come and grab all those liquidities. They will trigger your pending order. They will dip in again and collect your stop losses and start dropping to the downside. We call it the market trying to clear liquidities and the rest of them. So the moment this kind of thing happen, you see the market returning back to the support level as well, and then you see the market clearing all the stop losses here and start moving to the upside. So those that in the VIP channel, when we get to the strategy itself, we'll try to explain everything about it, a particular stuff, because this is not part of the very particular lesson. But you just need to understand that whenever this kind of thing forms, that it always tries to grab liquidities above the resistance level, because it knows that a lot of others are resting above this very particular high. So there's a mistake I don't want you to be doing, and which is this: I don't want you to be going in for a buy or for a sell at the middle of the range. That is why I say you need to discover the height of the range by following the first high the market printed and the first low the market printed before you started seeing all this consolidation. So you need to be able to get what you need to do. What Never you go in for a buy or for a sell in the middle of the range, no matter what, do not try it. Because when you go in for a buy, let's say you went in for a buy around this zone. Look at it now. You went in for a buy around this particular zone. Sorry, I think I will use more better one. You went in for a buy around this zone, and in the market you are targeting the support zone. Remember, you if you go in for a buy at the middle of the range, that means your stop loss need to be at the low of the support level. And when you do that kind of thing, you will come to realize that this your stop loss is so big, and there's a higher tendency that you are going to, if the market hit your stop loss, that you cannot even be able to withstand the loss. Even when you place that kind of thing, even you yourself will be very scared, because you're going to remove it, because the kind of money you are going to see there, it will be very difficult for you to accept the fact that this is really going to be this might even play out. So when you go in for a buy at the middle of the range, you stand a chance of risking very big, and you stand a chance of being manipulated, because the market will decide to buy a little, and the next thing you see the market taking you out to hit the support zone before going to the upside. And when this kind of thing happens, it's going to be a painful one. So when you come to the resistance level as well, the same thing for sell. When you come to the resistance level, you only sell at the resistance level. Even if the market has wicked you out, it is not as the same thing as someone that has already bought or sold at the middle of the range. Okay, and that is why trading range can be very very difficult, because you barely the market, you are always prone to market manipulations. Okay, so that is why, if you don't really understand, or maybe after multiple videos that we have given to you and you're still struggling to understand this particular range, I'll always encourage you to trade a trending market, and a trending market like an uptrend market and a downtrend market, because everything about the range is very very confusing. Okay, then even before we go to the chart to explain more of to spot all these things, I want to tell you that the moment you come to the chart, you spotted that the market is going to the upside, you spotted that the market is an uptrend market, you need to just concentrate your mind on buying. You need to buy, you don't need to sell. Now, this is a common mistake we normally make, that happens, that whenever we do this kind of thing, we keep on losing. There's something we call follow a trend and going against the trend. Following a trend and going against the trend. Following a trend is when you discover that something is buying. Then you have to wait for retracement for you to go in for a buy. But can we really wait? We understand the fact that we have a higher time frame. We understand the fact that we have a higher time frame like this. We have what we call a higher time frame, and we have what we call a mid higher time frame, and we still have what we call a lower time frame, right? Now I want to explain all these things for you. Now, when we consider the fact on a higher time frame and then lower time frame, let's just use this kind of thing. Although we have the mid higher time frame as well, mid higher time frame, and then we now have a lower time frame. This lower time frame can still be called an intraday time frame. Can still be called what? An intraday time frame. An intraday is something that look like it. Intraday. So whenever you hear somebody mentioning intraday time frame, the person means lower time frame. So when you consider the market on higher time frame, this is when you are analyzing the market from a daily time frame, and then a daily time frame, 4 hour time frame. This is what we call a higher time frame. Okay, this is a higher time frame, and or whenever you are analyzing the market from weekly time frame, because some people go as far, when we go to top down analysis, we sometimes even start from monthly time frame to analyze the market down to the last level, which is at the lower time frame. We analyze the market from monthly time frame whenever we are doing a top down analysis. We have a top down analysis as part of the particular lesson. So we get there a particular place, you see how all these things is being done. Okay, so when you are on higher time frames are like monthly time frame, weekly time frame, daily time frame, and 4 hour time frame. So when you consider something on mid higher time frame, this is what we say about the market on 2 hour time frame, 1 hour time frame. So this is the way we call a mid higher time frame. And then this particular one again we call intraday time frame. I think it's on 30 minutes time frame, 30 minutes like this. And then remember, I wrote 30 minutes. That's what I mean. 30 minutes and 15 minutes. I'm not going to be writing all those minutes. 5 minutes and then 1 minute. Some people even have 2 minutes and 3 minutes, anything like that. Some people even have like 3 seconds. So we understand the fact that when you come to the chart, that it's not as simple as this, right? There's a higher time frame structures and there's a lower time frame structure. But when we get to that very particular part, we are going to pass it because that is all about consolidation. That's all about BOS and the rest of them. So I just wanted to understand the fact that whenever they see the market that is buying, whenever the market print a new high, a new low, and the market has taken out a new higher high, all you have to do is to wait for a retracement to go in for a buy at the new higher low it has printed and target to the new higher high. Never you try to sell the market because you feel that the market is about to sell. Let me capitalize on the move. The truth of the matter is that it is never as simple as this. Whenever you try to do that kind of thing, you are really going against the trend. When you see that the market is pushing to the upside this way, and then you realize that the market has taken out a particular high, you feel that yes, this is time for the market to come down. And the truth of the matter is that look at what is going to happen to you. Now you see the market might even sell a little and decide to go up again. It decides to go up again, collect your stop loss and start dropping again to the downside. Then you try to sell it again, it will go up again, collect your stop loss, and this is how the market will keep on doing those kind of things before it will decide to return back to the downside. Something like this normally happen. Or sometimes you see the market even dropping fastly to the downside to pick up orders. So you just need to stay away from any particular kind of thing. Although when we get to liquidities, you come to understand why when you start seeing this kind of thing, you so be happy with yourself. Okay, then you stay away from all this kind of thing. When the market drops to the downside, mitigate the particular point of entry that is there. You go in for a buy, targeting the new higher high. The same way it is being applicable on a downtrend market. Because there's one thing you just need to know is that you don't know how long it's going to sell. So that is why you just need to wait for retracement. There's a period of waiting in the forex market, and there's a period of what entering in the forex market. Okay, so when we talk about something that is on a downtrend market this way, when it's in a downtrend market, that's when it prints a new higher low, a new lower low. Never you try to push it up. When you try to push it up, you don't know how long it's going to buy before it drop to the downside. So you might buy a little and take you out again before you see it dropping, pushing to the upside to mitigate the previous higher low before dropping to the downside. So you just need to wait for the market to always retrace and you go in for a sell. You wait for a retrace, you go in for a sell. Okay. Now let's now try to understand for the resistance. We wait for when it gets to resistance level, you sell. When it gets to support level, you buy. So now let's start with a trending market, which let's gonna use something like a trending market. Let's try to look at so we want to go to a chart to look at a trending market, then to see how the market looks like. Or let's start with a downtrend market, which we're going to be making use of a GDP JPY to see how the market looks like on a downtrend market and versus how the market looks like on an uptrend market. Because I just need to show you guys those kind of things. Okay. So now look at what really happened. This is GDP JPY on 4 hour time frame. Let me try to compress the chart and let's see what the market is doing. So the very particular place now, if you look at the market for the very particular aspect, or let's try to keep it this way. Let me okay, fine. Look at this. So look at what we have here now. Look at what we have here. So look at from here. All right. So now let me try to use my Eclipse to mark it out. So now when you consider that the market is an option market, this is something that look like this. This is what we call an uptrend market. This is what we call what? An uptrend market. This is what we call an uptrend market. And this is what we call a consolidation phase market. I'll try to be looking all those things so that you can see the difference between all these things. Before I will even go to that accumulation manipulation of a thing, then I will try to explain all the very particular parts of you. So there's a part on that very particular video where I wrote accumulation, manipulation, distribution, and under it I wrote London session, New York session, and what they call it again, New York session, and I think nothing else. London session, Asian session, London session, and New York session. We are going to explain that. So this is what we call a downtrend market. So let's use another color for a downtrend market. Let's use something like let's use something like this very particular color for it. So this is what we call a downtrend market. We call this one an uptrend market. So what you can also see here is another consolidation phase market as well. From here, the market made a move to the upside. This one can still be called, sorry, this one can be called an uptrend market. So you can see this is an uptrend market. So this is what we call an uptrend market. So this is called an uptrend market. Okay, so this is an uptrend market, and then Let's try to give it another color, the color we gave it previously, which is a yellow, so that the option market is always seen on yellow, and this is now a downtrend market. Are you seeing something? Whenever you see a downtrend market, the market is massively dropping to the downside. Okay, so then we will consider another uptrend market. So I try to give it another color, try to give it that very particular color we gave it before. From here again, we have a massive push again to the upside. So you see, the market will always sometimes move to the uptrend, sometimes it switch to a downtrend market, just like what I told you about you climbing different staircase to achieve your goal. But there's something I really want to show you. This is what I call a sideways market. The market is currently on a sideways market as far as I'm concerned at here. This is a consolidation phase market. Although inside it we can see a downtrend and uptrend market because this is a higher time frame. Okay, inside this particular thing, we can see that the market is in consolidation phase here. To this because this is a sideways market. Okay, and then you can also look at another option market here as well. Whenever the market is pushing to the upside, we call it an uptrend. This is what we call uptrend. This is what we call an uptrend market. You can see we call this thing an uptrend market. Okay, we call this very particular thing here a sideways market. Look at the sideways market here. Look at a sideways market. So I'm taking more of my time to show you what I mean by a sideways market so that you will not be confused. Okay, so look at it now. I think I have done much of this. So let's now look at one particular pair that is called GDP. Although you can spot this thing on any time frame, you can spot it on any time frame. So now let me use one particular pair to analyze this very particular consolidation phase market to show you again what the market normally does well on a consolidation phase market. Okay, so now this is okay. Let's be very fast about that. There is a particular pair. So when you also talk about this very particular thing, GDP. Okay, let's remove the odd NZD and type the GDP. So whenever you hear somebody telling you that he's trading accumulation, manipulation, distribution, accumulation, distribution, manipulation of a thing. You see, those things are not different from this uptrend and the downtrend market. They are not different. Whenever you hear the person telling you that the market is accumulating, it means that the market is consolidating. Something that look like this. It means that the market is what is consolidating. When you hear about manipulation, it means that the market is sometimes pushing to the upside or pushing to the downside. Okay, when you hear about distribution as well, this is like when you talk about session liquidities, there's something they will tell you that the market will consolidate, that the Asian session will consolidate like this, the Asian session will consolidate like this. The next thing now, you will see the London session manipulating above the Asian session. Then you see them retesting back to the Asian session before the market will now start distributing again to the upside during the New York session. You see, this thing, when I get down to BOS, you come to understand that all these things are the same. This is what I mean. The market will accumulate, the market will be on a sideways, the market will be on a range phase. A time will come, the market will escape from the range, and a time will come, the market will retrace back to the range to continue pushing to the upside. But there's some people as those equally giving it a name called section liquidity. That this is a period of time where the market is accumulating Asian session high and low, and when the market break out of the Asian session high during the London session, they will wait for London retest and then moving for a buy upon the New York World session. Sometimes when the market accumulates like this, when the market will be accumulating during the Asian session, when the London session comes, the London session breaks below the Asian low, and then upon the retest of the Asian section liquidities, they will go in for a sell, which is during the New York session. They would now distribute to the downside. These things are just the same thing of what I've already explained to you guys. You don't trade during the Asian war. You don't trade during the Asian session. That is number one thing. And again, it is very difficult for you to be trading during the when the market is on sideways or is consolidating, because you might be prone to work, you might struggle to know even where the Asian high and where the Asian low is, or where the range high is, or where the range low is. Okay, so I will always encourage you to be trading a trending market. So you see, when the market breaks to the downside, it gives you a higher low, yeah, it gives you a lower low. Upon a retracement, upon, I told you need to wait for a retracement. Then when the market retraces, then you go in for a sell down to the downside. That means you are following the trend. Can you see how these two things are the same? So you just don't need to stretch yourself. These are all the same. When you hear about somebody talking about session liquidity, simply tell the person that what is still the same thing as a consolidation phase, uptrend and a downtrend. So it's just the same thing. So we go to GDP CHF for me to show you a reciprocal this thing, something like a real range market. So look at what we have here. I will try to delete everything here. Look at what we have here. The video seems to be a little bit long, but you can see I'm really taking my time to make sure you understand every part of what I'm trying to explain to you guys. I understand the fact that these learning online can be a little bit straightforward. That is why we need to cover up everything, and that's why we also wait for your questions. So this is what we call a pure range phase market. Look at the market on a sideways. You see, the market print a new high, the market print a new low. Now, you remember what I told you about getting the height of the range and getting the low of the range. So when we consider the height of the range, you could see that the market pushed aggressively to the upside, and then the market actually broke this very particular higher high. The market broke the very particular higher high here. Let's see, the market broke the particular higher high here, and then the market has what we call a higher low. Then most of us might be looking for a buy. The next thing, the market now retrace a little around the very particular zone. Look at the retracement. The market retraced a little here, and the market printed a new to the upside. Came back again. Now see what we mean consolidation. So this is the height of the range. This is the height of the range. That's the first high the market printed, and this is the low of the range. This is the low of the range. Look at it here. The low of the range is here. So now this is the low of the range. So you could see that when the market tests the high, it sold down to the support level. There were a lot of early buyers around this zone. There were a lot of early buyers around there who were trying to take up price, who we think that price is going to buy for a long period of time. The next thing, the market takes them out, the moment the market tests the support level, you see how the market bought, right? Then this is another people trying to go in very early at the middle of the range. You could see at the middle of the range. This is just at the middle of the range. This is at the middle of the range. The next thing, after all their stop losses are here, maybe they are targeting the height of the range, which is the resistance level, but they could not really achieve their goal. The next thing, we'll see the market dropping to the downside, clearing all their stop losses, and still move to their direction. You see the market coming so closer to the resistance level now to drop to the downside. Always understand that these guys that we are trying to push, any green candle or any red candle you spot at the middle of the range, it means that there are some early buyers and early sellers at the middle of those places, and their stop losses are never below here, but their stop losses are still in the middle of the range, and that is why you see the market still tagging them out. So whatever you see at the height of the range is what we call spike. All these things that spike. This is the market manipulators, or this is the market makers understanding that a lot of orders are resting below here, so they need to tag them out to go their way. When we get to the real strategy, you understand that whenever you see the market removing some people's stop losses, is an additional confirmation for you to know that there's a higher probability that your zone will play out. You can see where the market is now. It has already tagged in a lot of early, it has tagged in all the stop losses. In fact, it took out the stop loss here, the stop loss here, the stop loss here, and even the one that is here, and it's now looking like it's trying to drop to the downside. Let me show you more proper so that these guys that try to that try to sell here, you can see how the market pushed to the upside, cleared all their stop losses, cleared all their stop loss within a week. The next thing, you see the market now dropping to the downside. This is what I really mean by that. So please, guys, I believe that this very particular information is worth enough for you to understand the three phase of the forex market, where I explain the option market, the downtrend market, the accumulation phase market, and then the consolidation phase market, which can still be called accumulation phase market. Anytime that things are consolidating, we normally call it accumulation, sideways, range, consolidation. You can as well say that whenever price is accumulating, that this is like an Asian highs and low. Okay, when you talk about the manipulation or the uptrend, that can still be called the downtrend market, which is what can be called the London session or the New York session. I believe that this very particular explanation is very enough for you to understand what I mean by the three phase of the forex market. Okay, try to absorb this very particular thing and understand or watch the video back to back. It will help you to understand what I mean on a particular what lesson. Never forget to drop your questions because I will be there to be asking you questions on each and every topic we pass, remember how we do it. You always try to pass some exams before we'll proceed to the next level. All right. So now this is where we bring an end to a particular video. Then the next video we'll be talking about what is the next lesson. We'll be talking about the next part of the very particular stuff, which is we'll be talking about I think was I in gold I wrote all those stuff. Okay, in Bitcoin. I think in Bitcoin. So I think in the next lesson we'll try to be talking about these break of structure of a thing. Okay, let's see. Okay, thank God. So in the next lesson we'll try to be talking about the very particular stuff. We will explain we are going to be explaining how to spot internal structure and how to spot external structure and how to spot internal structure. Okay, so now this is where we come to an end. Please like and subscribe to the channel. Make sure you turn on the notification button so that you'll be the first person to be notified by YouTube anytime we drop a new video. Also leave a like and a comment below on any question you have at the YouTube. Drop your questions. I'll help you as well. And also try to share the video, please. I'm begging you, try to share the video. Okay, for now we bring an end to this.